Hey guys, welcome back to CPAs After Hours.
My name is Z.
I'm Austin Malone, and we're here to tell you the parts about being a CPA that don't show up in textbooks or in your CPE courses. Today we're going to be talking about CPA Firm billing. And Z, why don't you tell us a little bit more about that?
There's a lot of different aspects that go into billing. My last employer told me billing is an art. He said if at least some of the people aren't complaining, you're not charging enough. Which is a crazy statement to say, but also kind of true, I think. If everybody is completely content with what they're being charged across all of your clients, then your prices are probably a bit too low. Supply and demand is a real thing. And if you're not optimizing that supply and demand curve, you're probably losing out on some profit as well. So a couple different topics we can dive into. We're going to talk about how do we price a tax return. I did one last night, and the number I came to is a lot higher than I originally thought. There are a couple of different things going on. We also want to talk about what are some things that can make your return go up or down that you have control of. So if you want to place an investment into a privately traded partnership or a publicly traded partnership, and you're going to receive a K1 from Energy, then that's your fault, but you're going to be charged an extra $150, $200 to do that. And we can talk about why some of the complexities increase the rate of how much we charge. There's also internal record keeping that you have going on, whether that's in Excel or QuickBooks. What are you doing there that impacts how much we charge? Because if it's a hot mess, you're going to have a hot tax bill. If it is pretty clean, pretty simple, we can just take it, do a little bit of investigation to make sure it's all right. Keep it moving. So with those kind of three ideas, we can dive into more, obviously. Where would you like to start?
I'm going to expound on what you said earlier, where you said, if some of the people are not complaining about the fees, you're probably charging too low. So I think a good place to start is kind of lay out the landscape of the three major firm models.
Agreed. That's a good idea.
Okay. So there are retail shops. I'm thinking H&R Block, Jackson Hewitt, Liberty Tax. If there's somebody out there waving a sign and they're using high school students to do the work, it's probably a retail shop. Or like the other night I was at Walmart at 8:30 p.m. and there was somebody sitting in one of these booths trying to get people to come in and get their taxes done. And they asked me, and I said, thanks, but no
You
thanks.
should have taken them up on it.
No, I didn't have my documents otherwise. Okay, then there's people in the middle. Those are boutique firms, so they handle things that are a little bit more complex and are a little bit more expensive. And then there's larger firms that have the ability to do really, really complicated things, but also are usually comparatively really, really expensive. So we try to exist in the middle, in the boutique firm lane. And let me tell you why, as a client, you might want the cheaper or the more expensive one. So let's say you do have something kind of complicated. If my model is that I charge $150 to $300 to do a tax return, then I have got to get that thing out of the door as fast as possible. My business is built on volume. I'm like a McDonald's instead of like a Five Guys, And so if I have something kind of complicated, but they're still going to charge me that lower price, I'm probably going to have errors on my stuff just because they're trying to push me through a system that's not designed to handle complexity. Okay, on the other hand, if you do come to us and all you have is one W-2 and you've got a kid and you think you're going to get earned income credit, we're probably going to be more expensive than where you could go and get it done cheaper or even somewhere like Vita. And so we're probably not the best fit. And so we probably don't also need that person to take up a slot on our roster where we could be helping the people that really need us. So no harm, no foul if you use any of those three lanes, but it's just kind of important to realize, why you might need one over the other. We've had a couple clients that were doing over $1 million a year. I even heard another pro the other day tell me they had somebody doing $20 million a year who was using H&R Block, and never have we seen a situation like that where we thought it was done right.
Where there's not a correction to be made that dramatically pays for the tax prep fee. It just doesn't make sense. You mentioned Vita. What is that?
Okay, so there is an IRS program, and it's called the Volunteer Income Tax Assistance Program. Is that what the acronym is?
I think so.
Okay. Basically, what they do is if your income's below a certain threshold, they will prepare them for free. Here in Conway, there's actually 2 branches. So there's one that does it at United Way. There's one that does it at the library. I think both of them are good. I would not volunteer in the one over at the library just because the way they do it kind of stresses me out. So if I was going to volunteer, I'd prefer to do it the way they do it at United Way. But if you're the client, who cares? Take either one. And I think it's a really good resource for people. There's also like free file stuff online, but this one allows you to go in and get somebody who has passed some real certifications to look at your stuff, and it's multiple set of eyes. There's a quality review on every return, so it's probably closer to like the CPA firm experience than what you're going to get at any of the retail options. So if you qualify, it's a good place to start. There's some restrictions. At times you can't do it, but they'll advise you of that, and they know where to send you if you are not going to be a good fit for them.
Yeah. Thank you for digging deep into that. We mentioned the 3 different pathways. What would make sense to go hire like a Forbes or like a Frost, like something really, really massive?
Well, I could be kind of tongue-in-cheek and say about nobody. I mean, I don't know of anybody we've run into where I really felt like they would be better served by one of those firms. In theory, if you're a really large multi-state operation and you do need quarterly vouchers, they have got more manpower and more layers to make sure that stuff gets done pretty well. So if we ran into one of those, I could see sending it their way. We could handle a few of those, but that can't be our bread and butter just with the amount of staff we have, and it's not really the kind of work we'd want to do. It would be nice to have one just to say that we do it and keep my skills sharp on it. I think also if you have a business with a ton of partners and so there's a risk element, you might go with a bigger name just to satisfy your other partners, right? Sometimes there's stuff like in the operating agreement I've actually seen where it says like it has to be done by like a Big 4 firm or something. Forbes is not a Big 4 firm, but so you might be forced to do that. If you need like audit and tax under the same roof, that's a really good reason actually that I forgot about until this very moment. We don't run into a lot of people who actually need a full-blown audit, but I could see wanting that all in one place. You work with one partner on the audit, one partner on the tax side. They kind of coordinate internally to make sure the deadlines are met. That can be really good. They do international stuff. A lot of times they have like a whole international branch of the home office that can kind of assist. You have like a hotline you can call into if you're into something you don't normally see. They do have a lot of like very niche expertise already in there, but you're paying for that and you may not need that. So like we typically, if we run into something kind of like that, instead of us having it all internally and basically billing everybody for a slice of that, we can just refer it out to somebody who is a specialist.
You mentioned the 3 different pathways, but we didn't really talk about billing. What would you think Jackson Hewitt or HR Block kind of start at?
Well, Z and I disagree on this. So every return I've seen out of H&R Block and my market research says their average return for married filing joint with a dependent is $550. And so we're at like $635, so less than $100 more to come work with us. If you're working with them, it's probably somebody who has been through their training program, which is like 6 weeks on Lloyd. There is usually a CPA in the office if they have signed the return, but they're not a substantive part of the prep process. So $550 is what I would say, and that's been probably 2 years, I would imagine, who've gone up in the meantime.
What about Jackson Hewitt?
Jackson Hewitt's even cheaper. They're more around the $300 price range. So that one I think is more of a strong. But you'd be surprised how many people with established businesses do use H&R Block. And I think it's because they're responsive. So you email them and you get an answer. And it may not be a good answer, but it's an answer.
Yeah, that's not... you can't paint boutique firms with the same brush there. Not a lot of...
The other hard thing I'll say, too, is I don't know if those H&R Block offices are franchised or what. My gut is that they probably are. I haven't done a ton of research into them, but there is a difference between offices, too. So at the end of the day, the stuff is getting done by people. And so you can have one office with a really good culture and really good talent retention, and then you could have one It's totally disparate. And so we've run into that as well. Like, we know particular offices in our area where one is stronger than another. And we know to kind of have our tinfoil hat on when we look at.
Every time I get a return for X H&R Block office,
I was going to say, please, God, don't throw out the...
there's potential for money to come back to the client and me to be the hero. I love being the hero. I had to be the villain the other day. It's not as fun. So, okay, what about Frost or Forbes? What does their minimum kind of look
These
like?
are kind of hard, and I've been removed for a little while, so I don't really know what the current billing is. I'll say I know we had multiple returns in the office when I worked at BKD, which is now Forbes Mazars, that were $100,000 tax returns, just because they had so many state filings that went with them. So that's kind of insane. Most people can't fathom a $100,000 tax return. But you're talking about like 4 CPAs working in tandem on this project. You're talking about like anywhere from 40 to 80 hours spent on it in a very tight, compressed timeline. So it's not like throughout the whole year they get to spread this out. Like, you send the stuff in, and they've got like 2 weeks to devote 80 hours to that. And so it's sort of like you're getting charged a rush fee. That's kind of how it works. For the average Joe, they usually have some kind of firm minimum, and then if you're below that, if you aren't willing to pay that minimum, you're just not going to get in the door. I would say in our area, which is lower fees than up north, the minimum for a lot of those firms is in the $1,100 to $1,300 range.
Yeah, I think Frost is sitting at around 1,200. Landmark's at about 1,000. Landmark's also not, and Landmark and Frost are also not that size. But I think BKD might actually be 1,500.
Back when I was at BKD, there was one partner, and he did a lot of smaller returns, farms and whatnot, and he did have some that were in the like $600 range, but that was kind of a very unusual deal. The returns that were worked under that partner were worked totally different from the rest of the firm. It was very much like he was like the volume partner, and when you worked under him, you were in kind of H&R Block mode. Versus when you worked for other ones, it was not as much running and gunning.
Gotcha. We talked about fee amounts. What about things that are on the return? Why are the fees the way they are?
Okay, so I can't really speak to how other people set fees. I came out and I did not want... One of the reasons we do... well, give me a minute. I forgot to even talk about hourly billing. I'm sorry, guys. Okay, a lot of the bigger firms are billing based on hourly rates. And so what they're doing from year to year is they are going to go in and see how much time was spent on your project. And they've got different hourly rates for each set of staff. Those start at the very low end of about $150. Some people balk at that, but when you think about it, a lot of mechanics are billing out at $150 an hour. A lot of lawn care bills out at $150 a man hour. So, do with that what you will.
That's also like paying for all the software, paying for the overhead of the facility. Like,
that's the other thing people don't get is you're not making $150 every hour that you're open. You're making $150 on stuff you can bill. New client consults are not billable. People calling you on the phone, generally not billable. IRS letters, generally not billable. There's a whole lot of things that we do. Staff meetings internally, like training somebody to work on your stuff, is not billable. And so you're kind of making up for those slow times during the year when we still have to eat, but there's no tax work to be done. So anyways, that's kind of unusual. The fees go all the way up to, at a partner rate when I was there, $400 to $500 an hour, which realistically nobody is actually putting that time on the bill, especially not for a full hour. They might be putting 15 minutes to it in review or whatever. A lot of times they write the bill down to what they think the client will pay anyways, so it ends up being kind of a joke. So the weighted average when I was there was about $220 an hour. And I'm sure it's gone up since then. But essentially what they're doing is they're trying to figure out how much time is spent on it, who is spending time in it, like what level of expertise is being applied, and then that's kind of how your bill comes out. They bill it at the end, so it's a surprise. I never liked that. We had a lot of disgruntled clients on that approach. And so when I came out, I said, I'd been doing a lot of work with contractors, and contractors have to bid. And I thought it was kind of silly to sit across from somebody that does construction or a plumber or an electrician or whatever and tell them, hey, I'm going to bill you whatever I feel like at the end of this. And so I said I was going to figure out a way to quote it. And so I came up with minimums. So like if everything went well, how could I make money? And so if you fit into that category, you got the minimum. And then I came up with a schedule of price increases based on additional complexity. So I was like, okay, when you have an additional rental property, that takes me so much time and I need to make this much money on it. So every time somebody has a rental property, I'm going to tack on that. Well, sometimes you lose your hat on that because not every rental property is created equal. Not every client has the same sense when it comes to sending you in documents. But for the most part, it seems to work. And to me, it was worth it to lose a little money every now and again and not have the conflict on the back end. Like they could, if they didn't like our price, they'd go shop somewhere else, and no harm, no foul. They're out the time it took to speak to me and get free advice that they can then feed to somebody else.
Also, that doesn't even include they're going to have a surprise bill at the end, and it's probably going to be about the same.
Yeah.
Potentially, or more, or maybe a little less. But they're not going to get upfront quotes, and they're going to have no idea how much they're going to owe until probably May, whenever the CPA gets around a bill on it, if it's a CPA. And then they're like, man, I should have just went with those guys because they are on top of it.
Well, and a lot of times, because we are in that middle tier, we get a lot of people who are graduating from the retail shops. And so we will be the first person they contact, and they'll get sticker shock. And then occasionally what will happen is they'll be like, oh my gosh, that seems ridiculous. They'll go to other places, and then they'll find their way back. So,
well, they might sit with us and talk with us, attempt to go to the other places, but nobody's taking in clients.
Yeah.
And unfortunately find their way back that way. It's a bit better whenever they find their way back on their own instead of being forced because nobody's taking clients. But regardless, we talked about kind of some of the aspects of why people bill what they bill. What are some big items that if you see that on a return, I'm sorry, but complexity just went up?
Yeah, so this is one that makes people angry, but I don't care. Multiple owners on a business, especially if all of them are not our clients, there's a risk associated with that. Every partner in the partnership can sue for malpractice. And so a lot of times on a partnership return, there are judgment calls that have to be made. A lot of partnerships are not keeping very good records. And so we're doing the best we can, but the likelihood that we can make a decision that affects 10 people and one person is not disgruntled is about zero. We're dealing with one right now that's kind of like that I'm kind of dreading having to respond on. And that's not their fault, but that is a risk that we need to be compensated for. And then a lot of times there's a lot of communication back and forth, answering questions to those other partners who you didn't even know you were dealing with until you get really deep into it and you're done. So that's one thing. On a 1040 return, definitely anything international. So even just like an international bank account, if I see a F bar in there, or if you tell me something that indicates that you need that, that's probably going to be a $300 increase just because the penalties on that are really high. So we need to get paid for the risk on it. It's also like requesting the info for that is kind of outside of our normal operating system. So it creates a little bit of headache internally to get that info. We don't see it all the time, so then it creates an issue with the staff. Publicly traded partnerships, like every K1 you get, if I'm quoting it, at least $100 added on for every one of those, just because a K1 can hit like so many different schedules on a tax return that it balloons the review time exponentially. It can add a bunch of state filings really quickly, and even if we don't end up filing them, we have to do all the research and make those judgment calls. People don't really see that. I respect that. Over a certain threshold, 1 million brokerage accounts.
Yeah.
Right? If you got like 3, that's fine. But if you have like 10, oh my gosh. That takes forever to summarize all that, and there's so many boxes that can be filled, and you have some income that's tax exempt and some that's not. it just gets hard to reconcile to those forms. What's another thing? A bunch of rentals, a nasty business. Like if I know that your records are going to be horrible, like you're basically going to get a bookkeeping fee thrown in there with it.
PTP. I know we talked about that earlier.
Yeah. That was kind of what I meant on the K1s. Like regardless of which K1 it is, I think that's going to be a premium. Passive activity losses sometimes. Like if you have a bunch of like foreign tax credit carryover that's kind of complex and might get released, passive activity losses that might be released, QBI sometimes if you're ultra high income and you've got the 8995A and there's like complicated loss netting going on, and especially like if you've got like basis limitations, passive activity loss limitations, QBI loss carry forwards, those all interact with each other. And so that can get kind of confusing. That is going to trip a staff up every time. So I know I'm going to have to help them figure out what's going on those forms. Also just disorganized records. And so I talked about the business, but, you know, sometimes people...
I feel like we have a really good process for getting people in and out. Not necessarily in a speed game, but an experience that will ultimately be their experience they want. But whenever they choose to not follow that and avoid uploading documents to that specific place or avoid answering the questions that we're going to need to have answered anyway, not necessarily out of being difficult, but maybe just because they don't want to. I guess that could be the same thing. But those are times and aspects when an additional fee should be or can be placed, in my opinion.
Or like sometimes people will just dump off like a dumpster fire, and like I can polish a turd all day long, but it's going to be expensive for me to polish a turd, and it'd be better if you just brought something good in to start. And we're pretty friendly. Like if you were to send in an email or call the office and say, hey, I don't know how to get this to you, I think we'd be happy to help you get it in a good record or a good state of records. But when we get a dumpster fire, like somebody has to clean that up, because I'm not signing a return that I don't feel like I can justify in the event of an audit. And I'm not going to ask Z to sign it either. So,
love it. So, brief overview. We've talked about kind of how billing works. What are some things that increase our bill? And we briefly hit on what are ways that we can get that bill down. Right? Some of the complexity, you cannot remove it. Your passive activity losses, unless you just have a lot of passive income to wipe them out, we're still going to have to track them. The business activity, you're still going to have. But what are some things that maybe that client can do that kind of assist us in maybe some ways that we can maybe charge a little bit less on prep fees?
Yeah, so the first one is you can follow instructions. I know that sounds tacky, but you know, when you come in at the beginning of the year, we send you out a place for you to upload all your stuff. You can also put your questions in there. So if you put your questions in there and you click submit, I'm going to see the questions, right? And I'm going to know to follow up if I need to. I can also tell like, oh, this is just a question they have that like I can answer when we deliver it, versus like, oh, this is something we need as part of the process. But if you don't ask the question, now you're relying on me to investigate on your behalf. So that's kind of difficult. So if you know that you have weird stuff going on, maybe flag that in the notes. The other thing is, if you have a business and you have like some kind of QuickBooks file or whatever, make the entries that we send. And if we didn't send you the entries, I'm usually pretty good to do that, to deliver them with the tax return if we've made a bunch of entries. Ask us for them, or ask us to go make them. I will go in and make the entries all day long. And that'll make everybody's life easier going forward. And usually, the stuff I put on the tax return looks a lot cleaner than what you had on your books, because I'm doing like some cleanup work at the end of the year that a lot of CPA firms don't do. And so if you're trying to go get loans or whatever, the bank would probably rather see the financials that I had than the ones that you got with all your loan payment sitting on the balance sheet with a debit balance because you never split the interest and the principal out. Stuff like that.
I pulled the balance sheet the other day, and it was, I think their net position was negative cash, $19,000. I don't know a bank that'll let you overdraft that much. I could be wrong. Maybe I'm using the wrong bank. I need to switch banks. But I asked the client, because this is going to go to the IRS. We're handling some IRS disputes for her. I asked the client, is this balance sheet correct? Because I see you have $500,000 as a receivable. You've got negative cash of $19,000. And supposedly, she pays a specialist in her industry a lot of money for all this bookkeeping and a lot of money for the tax returns and the IRS correspondence. And they might continue to use them. I have no idea. But if I can't get a hold of my accountant to handle my issues, to settle the notices that were created under their overwatch, and I pull a balance sheet that's hot garbage, you might be paying somebody for work that isn't as complete or well done as you originally thought.
Oh, that was another thing. I'm sorry. So on the topic of things you can do to reduce your bill, be pleasant and respond to inquiries. Right? If I'm asking you a question, it's because I think that question is going to help you. And so if you can answer that, that's great. And then if I send you a list of 10 items, it would be great if you could answer all 10 at one time. That would be helpful. Or at least the majority of them, and then hey, I'll get back to you on ABC. But definitely don't do one item at a time for all 10. That is a good way to give me a stroke, and I am already stressed all the time. So why add to it? Do you hate me? I love you.
I love you is a great sentiment that we always have with our clients. So we love you. In short, hopefully this gives you some brief overview on ways to lower your tax prep fee. Why do we charge what we charge? I get this question all the time. Our rates just went up the beginning of this year, and we had 5 different people ask, hey, why has it changed? Well, we're still able to answer the phone and talk to you about why it has changed. A lot of firms can't do that because they never raise the fees. They can't hire the staff to help, so that is why. But in the meantime, between now and then, when we see you next, have a good one.